because typically in the S&P 500, you're going to double your money like every 7 or 8 years. We're talking about fucking doubling your money if you reinvest everything, probably every 3 months.
Oh my God.
It is like a finger pointing away to the moon.
Thinking is medieval. They are asking all the wrong questions.
I'm sure. Good luck on that subway ride home to your miserable, ugly fucking wives.
People don't know what they want until you show it to them.
Trust me, I'm not driving a 7 Series without a stripper.
I think I read Warren Buffett say something like that.
What? Right. Who's Warren Buffett?
All right. Well, ThetaTendies, thanks again for coming on. You're our second guest of all time on the podcast.
Welcome to the dojo.
Thank you. I appreciate it.
Yeah, man. So I guess really quick, the reason I was so excited about having you on is this is our second wave of getting into crypto. We got in back in 2017, and then when we got back in this time, you were pretty much one of our favorite new crypto Twitter people that we found. And I assume you weren't around in 2017 as far as...
No, actually, the first time I bought Bitcoin, so in 2017, I knew about crypto because some kid was talking about XRP in one of my high school classes.
Yep.
And it was worth, I think, a tenth of a cent. And then we checked like 3 months later because we were both like, oh, should we put $100 in it? But we never did it. And we looked like 3 months later and it was like almost $2. And I was like, what the fuck is this? So once I didn't have a job in high school, but as soon as I started college, I got a job working at a fast food restaurant. And the first thing I knew I had to do was buy like Bitcoin and cryptocurrency. And that was unironically about December 2018, January 2019. And I bought my first like amount of Bitcoin at like 3150, which ended up being like unironically like the Pico bottom.
Yep.
And I kind of like leverage traded that run into the summer and a couple other times. I ended up getting liquidated like eventually every time. But so I was in crypto probably starting in 2019. And then towards the end of 2019, I decided that I was going to learn a little bit more about like markets and shit. And then 2020 was just an insane year for me and changed my life.
Dang. Yeah, because like the way you talk on Twitter, I figured you kind of came from the traditional equities market, but it sounds like it was the opposite.
Yeah. So I eventually, because I was like, nobody wants to work a fast food job. And so I was like, I got to do crypto. There's higher volatility. I can get leverage. I can quit my job easier. And so I traded crypto probably up until the last time I got liquidated was the sheep hump. I had ended up going to the gym short at like 7,000 on like 3x leverage on BitMEX. I thought I had like a stop loss, and then that stop loss was going to market buy if it got to like 7,500. Ended up accidentally canceling it before I ended up going to the gym. Got liquidated at like 10,400 on BitMEX. And then I was like, okay, we're going to save some money and we're not going to do crypto anymore. And we're going to go into equity markets. So I took about 6 months off and just kind of worked and saved money. That way I could put like 25,000 in an equity markets account.
That's awesome. Yeah, I was just say I saw you tweet about your kind of massive play right before the pandemic. What was tell us about that?
Okay, yeah. So in college I'm a political science major, and I take a lot of classes that have to do with international relations. And one of the classes I was taking at my community college, in late January of 2020, the professor handed us article to read for like homework that was about oil purchasing. And in that article, I had read that the United States and China was responsible for 50 to 60% of all the oil purchasing in the world. And I think not even 2 or 3 days before, China had went on lockdown for the virus. And so my first thought was that, well, that can't be good for oil purchasing, especially because, I feel that China uses more than the United States, given the amount of people and given the amount of coal that they use and that type of like quote unquote dirty energy. And I had thought about it, but I didn't really do anything for a minute. And then when we showed up to class the next week, the professor was talking about how it had spread to Italy and that how it was probably going to spread to the United States and how we were also probably going to have to go on lockdown. So that was my thinking behind shorting oil. So basically what I did is I promised I had just had my money like 25,000 in the S&P 500, but I decided that I was going to short oil after after the professor was talking about the United States going on lockdown. So I ended up buying $25,000 worth of April ExxonMobil $45 puts. And I think Exxon was currently trading at like 65. A week or two later, the market tumbled. I hesitated closing it in early March because or it was like late February, early March, because the S&P was kind of like bottoming a little bit around 300, but then it just absolutely plunged after that. And I think by early March, mid-March, I was about $5 in the money, and Exxon was trading at $40. So I had made about a 2,500% return on the 25,000. So that was like $525,000 plus the 25,000 that I had obviously used for the trade. And funny enough, I was sitting in that same class around that time, around mid-March, and some girl in the class just stands up and goes, "Oh my God, Bitcoin just dropped from 8,000 to 5,000." And she picks up her backpack, bawling tears, and she goes, "I'm ruined." Runs outside of the class and just leaves the class. So I'm sitting there thinking, holy fucking shit, Bitcoin's trading at $5,000. I bought in 2019 at like 3,000. I know, and I followed Bitcoin. I just didn't like trade it anymore. I was like, 5,000 is way too cheap. So the next day, I had closed the position for about 550,000. I wired it back to my bank account. It was in my bank account the next day. Wired it to Coinbase Pro, and I think by either the 16th, I think it was March 16th, I bought a little over 100 Bitcoin. And my thinking was that not that it was going to fucking run to 60,000. The only thing that I was thinking was Bitcoin had been trading in a range between 3,000 and like 14,000, and it seemed to have been topping off at 10,000. So my plan was, I'm going to buy it right here at like 4,700, and I'll sell at like 9,000, 10,000 area. So unfortunately, I ended up selling them at like 93, 9,400 or something, and doubled my money. So I basically from January to about like late April, early May, I went from like 25,000 to like over $1 million. And it was just kind of like a bang bang play. And I would definitely say there was luck involved, but after I made that like million, I decided to get like smart about it. I was like, okay, we're not going to fucking ape $1 million worth of Exxon puts just because you read a Barron's article on it. So that's when I probably really started to learn more things and became a better trader, investor, if you will.
Man, the timing of that is hilarious. Just like one right after another.
Yeah. I mean, it was crazy because growing up, I had lived, family was not very rich at all. When I was like 16, 17, 18, finishing up high school, my entire family, so like me and like 8 other people, were living in like a 1,000 square foot like home, and like nobody had any money. And the thing that actually got me interested in the markets, because like nobody had any money, everybody's problems always had to do with money. And I was like, well, I don't want to fucking end up like this. So I took time towards the end of high school, really after I found out about like cryptocurrency and stuff, and I wanted to learn more about money. So I kind of figured it out a little bit and realized that I kind of had to do the exact opposite of like whatever my family was doing. Mm-hmm. And that brought me to when I got my first job and stuff, and that didn't make me a good trader, but at least I understood like the concept of like trying to make money. And then it was, my life kind of changed around after that. It was really cool to see the flip from going and living with like 8 other people to holy shit, now I'm worth like $1 million and I'm like 20 years old.
Man, that is awesome.
That is so crazy.
I'll tell you, I'm the same way. My family was just like, they're just so fiscally conservative in everything that they do. But then every time like a problem would come up, it would always be complaints about money. I was like, guys, you got to pick one. Like either you don't care about it or you care about it. So my thing was like, yeah, we're secure in the bag no matter what. That's crazy that you were able to flip that so quick.
I mean, honestly, luck is, or what's the saying? opportunity is when
Preparation meets opportunity.
preparation means opportunity. So I mean, there's no fucking way that I could have told you that the market was going to crash. I was just kind of betting that oil was going to go down for a little bit. Ended up working out perfectly, and then I just took advantage of the arbitrage with the whole March crash in Bitcoin. So
Yeah, I found that really interesting because I put in like a recurring buy in 2019. Did not think that it was going to do very much. And then, yeah, I remember looking at it in March 2020 while the market was crashing. And I was like, if the market's crashing, why is Bitcoin crashing as well? Isn't this kind of seen as like a hedge to, and I guess it was just like the lack of discretionary spending. But I, in my opinion, they run together too often. Is it just because of a spending thing, or is it just not going to decouple for a while? What are your thoughts on that?
on Bitcoin currently or in 2020?
Kind of, I guess, starting in 2020 till now.
Okay. So I think ultimately in 2020, it just crashed because there's not enough. There just wasn't enough liquidity in Bitcoin, and just like Bitcoin is like the most volatile asset on the entire planet, and like any market, like if you were to look at the gold market, if you were to look at oil, if you were to look at the equities, if you were to look at Bitcoin, they all have they all crashed. Like markets are always somewhat synchronous with each other. But I really think just in 2020, no, I don't think people were necessarily on board with the entire hedge thing. I think people were on board with the fact that they wanted Bitcoin, or they knew that Bitcoin was going to go back to 20,000 at some point. And I really just think it was after that S&P 500 plunge. I remember it broke down above or below 3,000, and it was like there was these 2 days that it was just like minus 12% and then like minus 8% back to back. And I just think it was the liquidation, capitulation event in the equity markets that caused Bitcoin to do that. And, I just think people, when they saw the equity markets crashing, if you're somebody with a lot of Bitcoin, you'd be like, oh, fuck, this isn't good for people buying into Bitcoin. Like people aren't going to want to buy Bitcoin because they feel like it's going to crash. So I'm going to fucking dump it now. And I think that's probably what happened. And people, I still think Bitcoin is somewhat very correlated to the S&P 500, not in the sense of price action, but when we talk about like strength of the markets, like Bitcoin typically has its best runs when the S&P 500 or the equity markets are doing very good. I mean, if you were to look at going into late 2017, I mean, the Dow Jones was going parabolic, and so was Bitcoin at the same time. Now I think it's a different story, because back in March 2020, people that owned Bitcoin are retail. It wasn't funds. It wasn't, I mean, there were some funds, but it wasn't like big institutional money. And I think it's a very different dynamic now. I mean, you have major S&P 500 companies now. Tesla has it on their balance sheet. PayPal and Visa are, selling it. Square is selling it. Square also has it on their balance sheet. You also have these companies like Visa that are going to start settling transactions in Ethereum. That way, there's not like a 2 or 3 day settlement delay. I think it's a very different ball game now. You also have investment banks that haven't necessarily declared that they're in, but they're definitely in. And they're offering it to their like wealth management clients and stuff. I just think it's a very different ball game now. And the power of Bitcoin and the power of crypto is always been about social adoption. And I think it's always been about, do people believe in this? Bitcoin is backed by the amount of people that believe in it, right? Mm-hmm. If we're talking on a fundamental aspect, Bitcoin is no fucking different than Dogecoin. Mm-hmm. People just socially accept that Bitcoin is the store of value and Doge is the meme.
Yeah.
Now, in a parallel universe, Doge could be the fucking store of value and Bitcoin could be the meme. It's just that people socially accept Bitcoin as the store of value. So Bitcoin is the store of value. And I think people are underestimating that concept when it comes to the price that Bitcoin is at today. I mean, you have some of the most powerful companies in the world, most powerful people in the world, backing and is socially accepting that Bitcoin is somewhat of a store of value, which wasn't the case back in 2020.
That is such a quick flip. It's kind of crazy. Yeah. Switching gears a little bit, can you describe Theta to us? What is this? What is this concept that you have adopted as your username?
Sure. So when it comes to stock options, a lot of people only know the game of buying them. And if you have traded stock options for more than a week, you would know about something called theta decay. Theta decay is an options Greek, which basically tells you, and it's a calculation which tells you the amount of intrinsic value that is going to decay in the price of an options contract before the expiration. So it'll give you like a decimal point that'll tell you in dollar values how much of your option contract is going to be losing intrinsic value day over day. So a lot of people like to do options. They'd like to do leap investing for options because the theta decay is really low because it's so far to expiration. And you can just like Google this, but there's theta decay charts that almost show a parabolic downwards chart, which basically tells you that the closer an option gets to expiration, the more it's going to devalue as far as intrinsic value. But people only know the buying part of options. They only know that they want to buy Tesla calls if it's going to go to 800. So what I do, and one of my big things, it's basically how I earn my income nowadays, is I sell options. So I like to describe it as the options market is a casino, because if you're fucking betting on how much a stock is going to go up, what direction it's going to go up, and by when, you're either retarded or you have a crystal ball, and the second one isn't true. Mm-hmm. So you basically are taking a significantly skewed bet in order to try to make like 10 to 20 times your money. Mm-hmm. I'm an options seller. So if the options market's a casino, I'm the house.
Yeah.
So basically what I do is my name is ThetaTendies because Theta is a crucial part in making money when it comes to selling options. So basically what I do is, let's say some degenerate from Wall Street Bets wants to bet me that Apple is going to be at 140 by the end of the week. Well, I can look at the math and I can say that there's a 90% chance that doesn't happen. And if it does happen, then I'm going to make like 5% on my equity that week. So what I'll do is I'll be like, okay, I'll take your bet. And they'll pay me to borrow the collateral to take the options contract, because options contracts are leveraged. And that's how people, when you look at like Wall Street Bets and people make like tons of money occasionally, it's because options contracts are like synthetically leveraged. And so basically what I do is I bet that those people are going to be wrong, because the math says that, basically 80 to 90% of the time they are going to be wrong. So I get to collect free money for taking people that want to bet somewhat degenerately. And if they're wrong, if they're right, then I usually can benefit from it either way. So it's a very low risk way to actually earn somewhat of passive recurring income on equity or on cash in stock market related accounts.
That's great. That makes a lot of sense too. While I feel like you have a certain attitude towards the degeneracy of the crypto Twitter timeline, and I feel like that kind of probably comes from that. That makes a lot of sense now.
Yeah, I mean, here's the thing about like crypto. Like, I think that stock market options are more degenerate than leverage trading on crypto. Now, it depends what kind of leverage you're using. If you're using like 20 times leverage, they're probably very similar. But the thing that doesn't play into crypto necessarily, unless you use like Deribit or something and use the options in crypto, when you're leverage trading on crypto, there's no time constraint, right? You don't have to be right in a specific time frame. It doesn't have to go up a certain amount for you to not lose everything that you put into it. All you need is it for it to go in the direction that you want. And so in crypto, when you leverage trade, you only need it to go in that direction. You don't care necessarily how long it takes. You don't really care what happens in between, but if it goes in the direction that you want, then you'll make money. In stock options, it can go in the direction that you want. But if it doesn't go far enough, and if it doesn't do it in the same time frame, then you'll still lose every single thing that you put into it. So to me, leverage trading on crypto is significantly less risky than even stock options.
Have you dabbled in that at all, or what's your approach to crypto at the moment?
So right now, so like I said, I used to leverage trade when I didn't have any money and stuff, but crypto is such a volatile market that there just really isn't a need for leverage, in my opinion. Now you have some people that are amazing scalpers. The two that come off my head are Salsa and Gainsey. Those guys can use leverage. They understand risk management. They made a ton of money, and they have an extreme amount of edge when it comes to short-term trading in the markets. When I'm referring to that, to like, I hate leverage trading, it's not to those guys, because those guys have significantly more money than I have, and they have a significant edge in the market, which has continued to work for years on years now. When I say I hate leverage, it's more the fact that I think a lot of people don't understand why they're using leverage. And the honest reality is that most people are using leverage because they want to make money faster. But they don't understand the idea that when they are leveraging and they are wrong, it takes a significantly larger drawdown on their account, which makes it significantly harder to get back to break even. And I just think in a market as volatile as crypto, where you have things that are swinging 10, 20, hundreds of percents a day, why do you need to borrow money? I mean, why would you ever put yourself in a position to where you could hypothetically lose everything? It just doesn't make sense to me. So right now, I have about 75% of my money in equity markets. And I'm just, selling options and stuff, because it's just I sleep like a baby and I make free money just because people are being a degenerate. My current crypto portfolio, about 25% of my net worth, 80% of that is in Bitcoin. And then 20% of that is basically just yield farming on Solana and Ethereum and stuff like that.
Good
So
old
to me, it just makes more sense to be, if you really think crypto is in a bull market, Bitcoin there are periods in time where like Ethereum outperforms Bitcoin and everything like that. But in my opinion, for the most part, like, it just doesn't make sense to be betting on something more than Bitcoin.
I think that plays into, like, people outthink themselves the more, like, rabid the market gets. Mm-hmm. And then I think that's where you see so much compounding, like people get into lever because it's like, oh, well, I made this one mistake, but just make it all back in one trade. The degeneracy is it's palpable.
Yeah, I mean,
Very much.
That's kind of been the same with, I mean, not as much you, but I felt like we missed out on the 2017 a little bit for how deep we were in it at the time, and then kind of got distracted and didn't really pay attention to it. So this time around, I was like, well, let's just dive really deep into the meme shithole
Yeah.
and start trying to swing these these scam coins. And that's been at least my like degeneracy of the last 2 months, is just trying to make it all back in like these weird animal meme coins. It's been hilarious.
BLM, man.
Yeah.
Yeah. That's definitely a part of it. And it, those things might fucking work, but you just gotta treat it like as if you're putting it on a roulette table. And as long as you're okay, like losing your money in roulette, like, I don't see a problem with doing that.
Yeah, and like you were saying, I mean, at least with stuff like that, like the most you're risking is just what your initial investment was. I mean, it's not
right.
None of that's leveraged, so it's just kind of hoping something 200, 300% in a day, which honestly happens quite a bit the first couple of days of these coins. It's kind of crazy, it's still. I feel like everyone knows about it now, but for some reason it still keeps happening. Like every day we still kind of find some weird hits that people just keep buying into. I don't know when that's going to come to a halt, but
I don't know, honestly, but Ponzi the Ponzi, and it keeps going until the music stops. And when the music stops, as long as you're out before then I don't really see a problem with it.
I think you tweeted something like, you can keep dancing, just make sure you're dancing close to the door.
Right.
And I love that way of putting it. It's like the music's slowing down, just make sure you're by the door.
Yeah, the tweet you're talking about is actually something Warren Buffett had said. I think in particular, it was during the tech bubble. And he said something along the lines of, everybody's dancing in a room planning to leave at midnight, except they're in a room with clocks with no hands, which basically means that, you can have your fun and you could buy into this and and you could try to time when you think this is going to be over. But unless you're close to, you're ready to like leave the party at any point in time, if you're not in that position, then you're likely going to get hurt.
That is tough to stay. That is tough to stay true on.
Yeah. No, yeah.
Oh yeah, no, I get that. I had sold out of all of my Bitcoin, and I wasn't planning on getting back in at like 62K. And then I saw it, dip a little bit. And I really, I bought back in with about like, basically right now I have 15% of my net worth in Bitcoin. So my thinking behind it was, okay, if Bitcoin were to fucking go to zero tomorrow, my entire net worth takes a 15% drawdown. I don't care about that. That's something that I'm willing to lose, because I think Bitcoin also hypothetically could double or triple my net worth, even though it's only exposed to, I'm only exposed 15%. So that's a risk that I'm willing to take. And so, I bought back in some spot, and I really just kind of took some time to really think about the Supercycle narrative. I took a couple weeks to really think about that. And I've come to the conclusion that I think it's a possibility. So I'm staying in, and we'll see where it goes. If it goes to zero, then I only lost 15%. And if it goes to the moon, well, it'll be a really good bet.
Man, it's hard to see it going to zero. Like
yeah, I was going to say, like, even if it's not a super cycle now, do you predict that we won't have one, or are you one of those? Because I think Susie was saying that if it's not a super cycle this time around, then that might put a damper on the long term, because people are just not going to have trust in it the next time around. Yeah. So, I mean, you think it's kind of like an all or nothing point right now, or do you think we could survive another 3-year bear market?
No, I don't agree with that. Susie's very smart. Don't get me wrong. He's a giga brain. But the idea that if Bitcoin doesn't go up to a certain price, that people still aren't going to want to buy it is dumb, because I don't think the value in Bitcoin is necessarily what price it's trading at. And I think that's a big misconception. I think a lot of people, especially when it comes to shit coins, people start to really believe in it the higher it goes up. Like there's some weird psychological element that the higher something goes up, the bigger the validity of it. You saw it with Tesla. You see it with some of these shit coins. And that's not true to me. I think the value in Bitcoin, as I said earlier, is in the social adoption. And I don't think you can say that it's over for Bitcoin when Elon Musk and Tesla, and arguably Tesla is probably going to be the most valuable company in the world in 20 years. I don't think you can fucking say that a company like that is going. I don't understand the thinking that Bitcoin would not make it when you have that kind of adoption. When you have Square has it on balance sheet, Tesla has it on their balance sheet. A lot of these companies are offering products to their long-term wealth management clients. I see the future of Bitcoin just being increasing social adoption. It seems like it's the new gold. And, people are like, oh no, gold's the store of value. Bitcoin's a fucking Ponzi. Well, like, what the fuck was the store of value before gold? Like, at some point there had to be a transition from fucking sticks with like, markings on it, and that's a store of value, to gold. And, people want to argue like, oh, it's God's money and stuff. And yeah, it's been used as a form of currency for a while, but you can't tell me that you think storing gold and silver bars in your house, and that you're going to be able at one point, the entire world's going to collapse, and you're going to be able to trade that bar of gold for 6 cows and 2 buckets of goat milk. And that's just not fucking resourceful. That's not an easy way to store value, and that's not an easy way to exchange value either. I just think Bitcoin I think it's a super cycle. And I think the super cycle, and what I mean by super cycle isn't that Bitcoin is going to go fucking parabolic forever, right? Like, I don't mean this, we're going to hit fucking $5 million like in the next 2 years. I don't mean that at all. What I do mean by super cycle is I think you have enough money in Bitcoin now. I think you have enough institutional adoption with the S&P 500 companies and with a lot of these investment banks who don't want to admit that they own Bitcoin. or they're offering it to their clients or whatever. I think what you're going to see is Bitcoin is probably going to trade like a high volatility equity market. And I think we're seeing that now. You look at the fucking price action of Bitcoin, people are spooked, right? Because it's not parabolic. Yep. And that just tells you that there's more money in the market. I mean, if you look at Bitcoin from when it was at like 45K to, back in February to now, it's fucking trading like the S&P 500. People are confused because like Bitcoin, they're so used to, that parabolic structure. And that's all the kind of price action that they're used to. But now they're seeing, and a lot of the time that parabolic price action kind of looks like, it's kind of like a curve, like it curves at the bottom and then it shoots up. What you're seeing now is a lot of the price action looks a lot more like equity markets, where that like rounding price action is actually at the top. And then it usually reverses hard off the bottom. And so I think that's a really, really underestimated thing, that there's just big money in the market now. And I think that what you'll likely see, and what I think by Supercycle, is you're going to continue to see these 20, 30% corrections, whatever it may be, the entire time. And I think you'll probably see a Bitcoin bull market significantly longer than anything in history. And I think the Bitcoin bull market will match the same bull market of equities. So I think, honestly, right now, I think you can look at Bitcoin as if there's 6 or 7 years left of a bull market. But that bull market means that you're going to have declines, right? So if the S&P 500 declines 10%, you might expect Bitcoin to drop 20 or 30%. The S&P 500 drops 20%, Bitcoin might drop 40. But I don't buy it. There's too much fucking money in the market to see Bitcoin drop 80, 90%. I just don't see it happening anymore. And another big thing that I think plays into the super cycle, and the biggest argument against cryptocurrency, was the idea that cryptocurrency was a non-income producing asset. That was a big thing that you heard from a lot of the people that were very wealthy from equity markets, but saw Bitcoin as rat poison or a scam or whatever. I think DeFi has really changed that idea. You can now lend money, and your quote unquote scam, Ponzi, whatever you want to call it, now produces significant income. Mm-hmm. And I think that's a very big game changer. And I think a lot of that money is just people are going to reinvest it in things. And the market has chosen right now the networks and the coins that place the focus on producing income. PancakeSwap, Sushi, Uniswap, Radium, Solana, Ethereum, all of those BNB, all of those coins are related, and they have gone parabolic because people know that these are companies that allow them to create income. And that's not something that you've ever seen before in crypto. And so I really think it's the proponent, particularly when it comes to DeFi and yield farming, as well as the mainstream adoption with S&P 500 companies and institutions, which is really going to sustain the Bitcoin bull market.
Yeah, DeFi was getting into it after the 2017, 2018, when we got an Ethland, which became Aave because it had ETH in the name. We didn't even know any real companies like that. When we got back in it and realized that, I'm like, oh my God.
That changed names.
You've replaced a chunk of traditional banking. The first time I used Uniswap, I was blown away. I was like, this feels like trading, swapping currencies. This feels illegal. I didn't know I could just do this on a website that has 2 pictures on it. That blew me away.
Yeah, no, I honestly think that the reason, if we were just talking about people buying Bitcoin, I would argue that it would be somewhat more cyclical, and you could possibly have that bear market. Now, I could totally fucking be wrong here, right? And we could have a brutal bear market, and I still don't think that would take away from Bitcoin going higher in 2026 or whatever, or 2025. But people always used to joke that this time it's different, right? But they always used to say that. They used to say, this time it's different. Bitcoin's never going down. But nothing ever actually changed about the space. The space was, you had Bitcoin and Ethereum and a bunch of scams, but they didn't offer anything to the people that were necessarily buying them. You could code things on ETH, but there just wasn't like a lot of development behind that. I mean, we're talking about like maybe supply chain shit, but like, who fucking cares about supply chain? Now people have an incentive to own these things because they're actually earning money from them, which actually makes it an income producing asset. So when people used to say this time it's different, they used to say it with like no actual like backing or reasoning. But I think the fact that this time you actually have major companies accepting it, Bitcoin as a store of value to hedge their cash position, and you also have these Ethereum and a lot of these altcoins now actually producing like fucking mind-blowing yields just for providing liquidity in some of these liquidity pools. I think that's very fucking different than other cycles. Granted, I wasn't really here in 2017, but I do understand that in those previous cycles, it was about the coins going up, not about making money off the actual fucking coins that you're buying. So I just think this time it's a game changer. I don't think that we're going to see significant price acceleration. And I think that's really throwing people off right now because they're like, what's going on? Why is Bitcoin not moving up so fast? Why is it going sideways? Like, people aren't used to that in crypto markets. You look at any Dow Jones stock in the last like 5 to 10 years, I guarantee you it went sideways for 3 fucking years. Like, I just think you're going to see Bitcoin get less parabolic, but that's actually a good thing because that shows that there's more money in the market. And that's actually going to be able to prevent, I think, large scale drawdowns. I think you're still going to see probably a 40-50% decline at some point this year or some point next year. But I think Bitcoin is getting to the scale now where it's going to behave more like an equity market. Now it's going to be more volatile and it's probably going to have better returns. But I really think that you're not going to see that capitulation, 80-90% drawdown, bag holder type of stuff too much anymore.
Yeah, no, what you were saying about 2017 was really true because when we got in, it didn't feel like there was a lot of research to be done when it came to picking coins and like companies, if you call them that, when we were buying, and so we were just buying whatever looked cool or sounded cool or Twitter was saying to buy. And when we got back in this time, it just felt like the entire space had changed. Like you were saying, it was actually companies with utility instead of ideas being speculated on that might happen.
The yield farming is such a crazy thing to me. And I have to assume that when like non-retail, like when institutions really deep dive into like, wait, you can get what on Radium? I'm assuming we're going to see like a smoothing of those kind of numbers. But do you think there will always be better yields in this field compared to the traditional markets?
100%. I actually think what you're going to see happen is that you're going to see investment banks like JP Morgan, and they're going to figure out what the fuck DeFi is, and they're going to offer a product that yields 10%, and they're going to create like institutional bonds. So instead of like because the traditional thing in equity markets was the typical allocation used to be 60% equity, 40% bonds. And that's when bonds were yielding 5-6%. And that was a way that people could hedge equity markets, because typically when equity markets crash, bonds went up a little bit. And it was a way for people to balance their portfolio to limit drawdown. Now bonds are the negative, or the real rates are negative. There's zero incentive for anybody to own a fucking bond. So that forces them to take more risk in the equity markets. And that's why I think you're seeing like the fucking equity markets moon, because like there's zero incentive to own bonds. But what I think you can start seeing is JP Morgan is going to figure out what DeFi is. They're going to, offer a product that, offers 6, 7, 10% interest rate, but they're just going to take the money they get from that. They're going to fucking pool it in, ETH Tether on Uniswap and net like 15%.
Mm-hmm.
Yeah,
and then they're going to pocket the 8% difference, but you're also going to offer these clients, the interest rates that they're looking for. I think they'll definitely figure it out in some time. I don't think you're going to find JP Morgan fucking putting $100 million in a coat pool, but I think you'll slowly see it into like Uniswap, like something more mainstream, something where they're not going to get rugged, and something that they can use as an internal yield to offer a product to their clients. Like, it makes me think of like life insurance. Like, a lot of life insurance companies try to sell their product as an investment vehicle, and what they really do is they, in real terms, they probably offer a 2 to 3% annual return on the cash value, but they take the money they get from the premiums and they lend it out on credit card loans and car loans, and they yield 10% off the premiums. So what I really think you're going to see is a lot of these companies are going to take a model like that, where they loan out the money on Uniswap and a lot of decentralized platforms, and then they're going to offer a smaller yield to their clients and pocket the difference.
See, that makes me excited because like the people are still so scared about volatility and like all the crypto stuff in general that most of them probably will go that route. But the people that have been around long enough or want to go in there and get their hands dirty themselves are going to get better yields than really they have availability to now. Like, it seems like the retail actually has like more of a puncher's chance in this because either you were here first or you're able to take on a little bit more risk. But yeah, most people are just going to take that JP Morgan deal, and that's going to help us who are just kind of on the ground floor.
Right. And JP Morgan, if they're going to offer better interest rates to those clients, they can't take on a liquidity pool that would, that could potentially rug them of hundreds of millions of dollars. So they have to take on the liquidity pools that are the most stable and the ones with the most liquidity in them. So I think you'll probably see most of that money flowing into like ETH, Tether, ETH, US dollar coin. And so I really think the money to be made for retail is going to be in the fucking, the dark web of DeFi, like those ones where, you can find 500, 600, 1,000, 2,000% APR, because JP Morgan can't fucking ape in there and kill your yield.
Yeah.
Because they could get fucking rugged. There's no way that could happen. So they have to be stable. They have to be smart. They have to be the one that are avoiding risk. So everybody's talking like, oh, the yields are going to get crushed on DeFi. If the yields are going to get crushed, they're going to get crushed because more people figure it out. More retail figures it out. But I also think that when people mean crushed, they really mean like a fucking 150% APR, which is still mind blowing.
Yeah.
Right. Like, if you invest in a traditional equity market and you start investing at like 20 years old and you fucking sell when you're 65 and you let it compound for 40, 45 years, you probably, if you put in the S&P 500, you're probably going to make 40, 50 times your money. If you were to do that with a 150% APR, because typically in the S&P 500, you're going to double your money like every 7 or 8 years. We're talking about fucking doubling your money if you reinvest everything, probably every 3 months.
Oh, okay.
So you're going to see people make 25 years worth of, equity market returns in a fucking year of crypto.
And still
I mean, I genuinely think if people can figure out yield farming, it's the biggest opportunity they'll ever have in their fucking life. Next to figuring out what the fuck Bitcoin was in 2011. I mean, like, if you missed Bitcoin in 2011, like 99.9% of us did, you got to put your fucking money and figure what fucking yield farming is. Because I can promise you right now, if you're like leverage trading on all these fucking exchanges and shit, like you're going to fucking find yourself on those, like, always trying to get back to break even on your account. When what you could do is like sleep like a fucking baby and like make like an income while you sleep just for loaning your money. It's the most insane concept ever. And if you don't capitalize on it now, you're going to fucking kick yourself about it later.
That's crazy. So Bitlord always has this funny thing where he talks about how everyone in crypto, we're all the new, eventually going to be the new wealthy elite and blah, blah, blah. I mean, but thinking about it the way you described it, like how quickly you can compound, I mean, what is this going to look like in 30 years? I mean, how rich are people going to be? At least people that were in this space and knew what they were doing, even just now. I mean, that's going to be, wealth inequality is going to be insane for people that did not get into crypto at all.
Yeah. I think he kind of has a point. He might be specifically talking to Kobe, who's gonna like fucking buy the United States if Bitcoin ever goes to like 1 million.
I want to know how much money he has.
I would estimate he's between 500 million and $1 billion.
Holy fucking shit! I didn't think it was that. I thought it was.
Like 3.
Yeah, I didn't think it would be that high. But yeah, that's
I don't know. He's definitely has over 200 million.
Yeah.
If I had to guess.
Yeah.
But, I mean, the honest reality is that when we're looking at the world right now, you have an immense amount of people that are taking on significant student debt. And this is like the most poor generation of all time.
Mm-hmm.
Like not of all time, but like in the United States, people at like 25 years old are like the most poor they've ever been at 25 years old. And so what I really think is that the reality is that most people won't ever probably figure out what crypto is for a very long time. They sure as hell won't fucking know what DeFi is and the yields and all that sort of stuff. So there is an immense opportunity for the people that know about it right now. In 30 years from now, I think what you'll likely see is if like these yields stay where they are, and I'm talking like you can find like an APR above 100%, like those are going to be the people owning the beachfront property. Those are going to be the people that fucking retire early. I think that's going to be the new type of Silicon Valley startup thing. For the people that think it's too risky, for the people that think that it's a scam, or they're worried too much about like how much they might lose, because they don't see like the potential opportunity behind it. I think you're just gonna see a progression of what we're seeing now, which is a significant distribution of wealth. I mean, you're just gonna have the people that don't invest in any market right now are going to be royally fucked by the time they're older, and they're probably going to live with a life full of regret. But for the people that are like in equity markets or they're in crypto and they're learning what yield farming is, like if you can, I don't think people fucking understand in crypto like what time is. If you can fucking make, say you get an APR of like 100%, but you reinvest everything, so you get like a 300% APY. If you can triple your money every year, and like you're somebody that has like at least like $5,000, like bro, like you can fucking become a millionaire in like 5 years. And like everybody in crypto is like, oh, 5 years is such a long time. Like no, it's fucking not. Everybody that says like 5 years is a really long time and that they need to get rich right now has spent from 2015 to now trying to leverage trade Dogecoin, and they have fucking less than they started with. And they spend their entire lives trying to make it big that one time, that they don't realize had they sat on their fucking hands and let their yield or their Bitcoin compound, that they would be significantly richer than they would have ever anticipated. But they don't have a good understanding of like how compound interest and time works. So I think if DeFi is going to be the fucking thing for like the next 4 or 5 years, and I think it will, I mean, you're going to have people turn $5,000 into multi-million, and it's going to be the new fucking Silicon Valley. That's what I think. But those are the fucking people that let their fucking yields do the thing. And if they feel like their yield is crushed, then they fucking put it in a different pool with a higher yield. But it all comes down to the interest rate, but most importantly, the fucking time behind it.
Yeah, I feel like everyone gets into crypto because it's kind of a hype machine, and that immediate return money is what's attracting them. They don't really realize that what you're talking about is pretty fat. Like that's faster than anything else you're going to get anywhere else.
And the tried and true method through every other type of investing. Like I knew that when I went to college and like started to got an accounting degree and was like looking a little bit into the markets. I was like, oh yeah, this is a long-term game. Then once I got into crypto, all that part of my brain was evacuated.
Yeah, it completely erases your brain. Like,
well, here's the thing what people do, right? So they'll look at a guaranteed 300% return in a year, but they can't fucking get their hands off the gambling side of things because they're like, well, I can go to fucking Binance Smart Chain and I can find the next 10x in a week. Mm-hmm. And they're so fucking focused on making money now that they don't realize that like they're probably going to get fucking rugged, and they're probably not going to find the next 10x. And had they actually just taken the thing that's like, hey, I'll fucking triple your money in a year, and hey, if you reinvest it, like if you compound it like by week or like weekly or daily or whatever, you'll probably make like 600 or 700% return. So people are so focused on looking on a 10x on some fucking shitcoin that they don't realize a 5 or a 10x is fucking staring them in the face. And then if that yield stays the same the next year, then they're looking at a 25x. And if the yield stays the same the next year, they're looking at 100 fucking, I don't even know what that is. 25 times 5, 125x. Like if you were to go a lot of people right now and be like, oh, do you want a fucking 10x shitcoin or do you want to make 125x in 3 years? They're going to take the 10x. And that's a big fucking mistake. Because anybody if you had $5,000 and in 3 years you could turn that into over $500,000, you would be fucking retarded not to take that.
Yeah, I mean, I feel like that narrative is just now starting to come out a little bit more. I mean, I haven't really heard anyone explain it as clearly as you did just now, but I don't know. Yeah, I don't know if any of that information, like you said, is going to get down to most of the retail level at all. It's just going to be a kind of a casino for the next decade. Yeah,
no, that it probably won't. And the reason is because people in crypto are just degenerates. Like they're gamblers. They call themselves traders, but they're gamblers. And except for the people that can scout 200 IQ scalper brain and like super smart and have made their money scalping. Like I'm not talking to those people, but most of the people in crypto are looking to essentially do what a sports book would do for them, and double their money in like a fucking day. But people aren't comprehending that. Say the crypto bull market is 4 years long before there's like a 50 or 60% correction, and you find an APR that is 300%. And let's be conservative and say that if you reinvest all the rewards that you get from the yield farm and you put it back into the liquidity pool, and the price of the fucking thing that you put in the pool it stays relatively stable, and that would give you an APY of like 600%, which is 6 times your money. So if you 6 times your money, and then you 6 times your money, in 2 years, you made 36 times your money. And then you do it again, and you made 200 times your money. And then you do it again. In 4 years, you made 1,200 times your money. And people don't think that long. They aren't thinking that it's that easy. It almost feels too good to be true.
Yeah,
and people can't comprehend or don't want to because they're truly afraid of like making that much money, that they can put their money in something and they can, move it around occasionally if they want to find a better yield, or they believe in a certain coin or more, or they find something that they feel is going to be less volatile. They can move it around, but people aren't comprehending the power of APR, which is the reward that you're going to get from being in a farm, and then taking the rewards and adding that back into the liquidity pool. That way you can earn higher rewards, and the process of continually compounding that. I mean, you're going to mint multi-millionaires in 4 or 5 years. And I'm talking with people with little amounts of money. Like I only have about 100,000 in DeFi right now. Like DeFi is like maybe 5% of my net worth, but I know that 100,000 in DeFi, and I'm making like 300% APR. That's 6 or 700% APY when I reinvest it. I'll make 7 times that money this year, and then you can fucking do the math about how that plays out over 4 or 5 years. I don't need to have a significant portion of my net worth in yield farming. I only need a small portion, but that small portion is probably going to make a fortune for me over the course of like 4 or 5 years.
Well, while we're on the topic of liquidity pools, how do you protect yourself against impermanent loss? Something I barely understand because I have money in Bancor, but how do you avoid, for the people out there, how do you avoid getting fucked by IL?
So it's difficult. Truthfully, I didn't fucking understand it for a long time, and one of my friends, you guys might know him, Degens Weiland.
Oh yeah,
he's super funny, but he was the one that actually kind of taught me what yield farming was. He back in the summer or early this year, he had put about $1,000 in a bow pool, and that's worth multi-millions now. Like the dude made like 2,000 times his fucking investment, which is insane. And basically because I was worried about that too. I was like, dude, I don't want to get rugged for this much. Like, how do I prevent that? And basically, he told me, first of all, he had never lost money in a pool. Now, you can have the value of the thing. Basically, the way that impermanent loss works is that when it goes up, you're not going to get as high as a return. And if it goes down, then you're going to somewhat limit your return, but it also might like hurt the yield a little bit. So impermanent loss is like, say you put in $5,000 in a pool, but the coin goes down, and now you have scam coin USD pool, and now your actual like LP tokens are worth like 4,500, right? So that's impermanent loss. If you were to exit the pool and your LP tokens are worth 4,500 instead of 5,000 now, your impermanent loss is $500. The key to it, from what Degens has told me, is that you just kind of have to let the reward save your impermanent loss. So like if you're in a pool, right, and you put $5,000 in a pool and the APR is say 200%. Okay. So if you were to take all your rewards and you were to sell it for dollars, you would have $10,000 over the course of a year. So even if the pool and the coin were to drop 50%, you would still end up with, let me do the math. I think you would still end up with like a 50% return. I can't do the math in my head right now. But basically, the way that you can protect yourself against impermanent loss is to either reinvest your money in the pools that you get from the rewards, or to just be patient enough to let the rewards cover the impermanent loss.
And pick a coin that's not going to go like straight to zero. As long as it survives, it seems like that's kind of the best way to hedge. Okay,
and if you put it, another thing too that a lot of people I think really underestimate, if you put it in a USD pool, right, it has to be half the coin, half scam coin, half USD. If scam coin goes to zero, your max loss is 50%. And that's if it goes to zero.
Because it sells to the other side of the pool, yeah.
Right.
Oh, that's a good.
That makes sense.
Well, that makes me feel way better about that.
Yeah. Do you have anything else?
Dang, we're already.
Yeah, we're
it's almost
in
an hour. Yeah, we know you got. We know you
day.
got stuff to do. We know you're getting going through your college plans right now. Yeah, I know you've tweeted about this, but what is your what's your plan after you finish up school?
So, that's something I've been thinking about a lot. I'm not really too sure. Literally, Twitter and my girlfriend know about the amount of money I have. My parents think I have like a tenth of what I really have. So I like to keep that on the down low. I don't really want to be flashy. I don't really want people to know I have like good money. Just because like, I think people would start like treating you very differently. What I really plan to do after school, I think I'll probably travel a little bit. I've never been to Europe. I've never been to like Australia or Asia. So I'd like to travel for a bit, maybe take a year or two, and do that and enjoy things. If you guys have followed me for a decent amount, you would know my dream is buying property in Maui in Hawaii.
Yeah, I saw that. Yeah.
I just fucking love that place so much. And it's just, the vibes are immaculate. So, I think, we'll see how everything plays out, but I'd like to travel for a year or two, find a good place to enjoy myself, play some golf, learn how to surf a little bit. That'd be pretty dope. But eventually what I want to do is I want to start my own wealth management firm. That's why, everybody's like, oh, why the fuck are you in school? Like, you should drop out. Well, I want to be a certified financial planner. You need a bachelor's degree to get licensed to do that. So I want to open up my own firm one day, but I want to do it in a different way. A lot of people, when they think of wealth management, they think of the guy that's going to tell you, oh, you should put, 60% of your money in the S&P 500 and 40% in bonds and, whatever. What I really think, and actually what I'm kind of betting on, is I really think that you're actually going to see some really big developments in DeFi and synthetic exposure to equity markets. So really what I want to do, and I have to wait for marketplace to develop a little bit to do this. But I think what you're going to be able to see, and it's kind of there already if you look at like I think it's Terra Protocol, Mirror. They have liquidity pools for synthetic stocks and dollars. So like you could, I think it's like M Amazon or M Apple or, M Spy. And it basically stands for the synthetic version against the US dollar. So you can actually put money in a liquidity pool and say that APR is like 60% while having exposure to equity markets. So that actually limits, since it's synthetic and it mirrors the price in equity markets, you're actually going to have exposure to the very stocks that you would own in a typical equities account, but you would actually also be yielding like 60%, which would, or 100% or whatever the yield is. So that's a way that you can if you're like really risk averse to like the current liquidity pools in DeFi, like I would definitely check that out because you're definitely not going to get fucking rugged on synthetic Apple, because it mirrors the price of Apple. So what I really want to do is actually do a combination of like something like that, where for my clients I could do have synthetic exposure to the companies that they want to own while actually producing them a yield. And then if that really develops into like a significant thing, I think that would take away my need to want it to do like option selling, because I could earn a better yield doing that. So I want to do wealth management, start a company with that, and either do it synthetically if the tech and the platforms get developed a little bit more, or I want to start a company that focuses. If that doesn't happen, I want to do one that's focused on earning those option selling yields, because basically the idea is that you want to try to limit your drawdown as much as possible. And you can do that when you are earning a really high yield. So you can like outperform the market in either of those situations by, 3, 4, 10-fold, without having to have any exposure to the equity. And people are crazy about the dollar. They're like, oh, it's going to zero, whatever. Like it's not going to fucking zero. So I really think that, that would be something interesting. Everybody in wealth management right now, they're just taking their 1 to 2% commission on, their boomer client making 9% a year in a mutual fund. I think if you were to turn the game a little bit and make it actually so that the client is getting the returns that they deserve, I think that would be something that would put Wall Street on its head a little bit.
Yeah, that's the evolution of the financial planner, and I'm first in line. When that thing opens, you holla. I'll be following you. So many of the people we followed before, like in 2017, it's like, oh, this guy's into crypto, but he's been a lawyer for 20 years. Mm-hmm. I love seeing like this side of it, like finding out that you were that young. And I was like, oh, cool. By the time he gets his career started, he's going to have a leg up on everybody else in his field. You're going to be like on the front line of the evolution of that type of planning. And I am so happy that I get to watch.
I appreciate it. Hope it works out in the coming years.
We have faith. That's all we'll say. So we'll let you go. Right before we go, do you have a book suggestion to kind of bookmark the end of this interview?
100%. So I don't have one when it relates to crypto, but I'm not also going to give you the cliche answer. Everybody's like, "Oh, rich dad, poor dad, and Think and Grow Rich changed my life." I think that's kind of like a little bit cringy. Because those books, particularly like Rich Dad Poor Dad, it kind of teaches you about liabilities and assets. But let's be honest, Robert Kiyosaki is a little bit of a nut job, and he makes all of his money from just selling books and stuff. And he to me is like the original like get rich by telling other people to get rich kind of person. You really want to learn like how to be a good investor. And I think a lot of people that follow me, I think the appeal to my account is that like I just try to keep it really simple. Like sometimes I can go off a little too much about like complex things, but I think people enjoy following me because I can always give you a reason why I'm investing in something in a sentence. And I really learned that from Peter Lynch. if you read One Up on Wall Street, it's only, if you get the audiobook, it's only like 2 hours. So if you go to the gym or something, like you can totally like finish it during that time frame. He really preaches a lot about how you have to know what you own. You can't be investing in a fucking shit penny stock where they have a, gigawatt hyperconductor that's going to be this for medical technology. Like nobody gives a fuck about that, nor do I fucking understand what that means. Right. I own a lot of Disney stock because I think Disney is every kid's childhood. And I just make sure that the things I invest in are things that I can understand and that I feel are never going anywhere. And the simpler you make it, because let's be honest, Twitter is a place where people just like to flex their knowledge, right? Everybody always tries to sound the most complex and have the highest, complexity explanation for everything because they feel like it makes them feel smart and that people are going to respect them. That's not really the case. The simpler you make things, and particularly that book helped a lot because it makes you really, really simplify what the fuck you're buying, why the fuck you're buying it. And, having some conviction behind what you want to buy, making it as simple as possible for yourself is going to make it so that you don't feel panicked when there's volatility, or you don't get caught bag holding a fucking gigawatt hyperconductor company that's dog shit. Like you're not going to have to wake up in the morning and worry if Disney went to zero. Like that's just not going to happen. And if you invest in companies and things that make sense to you, that you can understand and that you feel have a real long-term value, then like you don't ever have to worry about like getting rugged or things are too complex for you. Don't buy into something because you think the fucker's going up. Buy into something because you believe in it.
I love it.
Love it.
Man,
Yep.
I appreciate you being with us.
Yeah, man. Thank you so much.
Man, that was some alpha right there.
Yeah. Well, we'll bug you again about coming on at some point, I'm sure.
We'll be in
but
touch.
yeah, man. Thank you so much for coming on, and we'll let you go.
Yeah, send me a DM when you post the episode so I can like tweet about it.
For sure. Yeah, it'll be probably 2 or 3 days, but I'll definitely hit you up.
Sick.
All right,
Cool,
man.
man.
Thanks, guys.
Thank
See
you,
you,
man.
brother.
See ya.
Big thanks to our sponsor over at CryptoCandies.io. Head on over to their website and check out their selection. They're always adding super dope and unique new crypto-themed designs, and we greatly appreciate their support. Big thanks to our sponsor over at CryptoCandies.io. Head on over to their website and check out their selection. They're always adding super dope and unique new crypto-themed designs, and we greatly appreciate their support.